Welcome to Markets Now. I'm Michelle Rook with Oliver Sloup, Blue Line Futures. Kind of a mixed day on Friday over in the livestock futures. In the grains, we were in negative territory. And let's start off, Oliver, talking about the WASDE report. Sometimes those October reports can be big market movers. This one was kind of ho-hum, wasn't it?
Yeah, pretty ho-hum, which is kind of what we were expecting, just kind of looking at some of the options markets and the volatility measures. We have the CME CVOL index for corn that was at its lowest levels since the spring, and we made new lows following the report today. So I don't know that there's going to be a whole lot of movement in the corn market going forward. I think my biggest surprise talking about corn was the fact that the expectations for the yield to be lowered. Everyone that I've been talking to, or most people I should say, have been reporting pretty good yields out there. So I was a little surprised that the expectation was for a drop. Obviously, we didn't get that drop. Yield came in a little bit better than expected. And I think that certainly put a little bit of pressure on prices. And I think ultimately it was a reminder that we still have a big balance sheet to work with in this corn and soybean market. And what's going to be the catalyst to really move this market higher from here? I think that's the concern. And the fact that there wasn't any real sign that we would get that catalyst, it certainly led to some selling pressure ahead of the weekend.
Yeah, because 550 million bushel ending stocks on soybeans and just under 2 billion on corn. Those are still pretty big numbers in the big scheme, aren't they?
Those are still pretty big numbers. And I think today's report was a reminder that these things take time to chew through. Bear markets don't end in a month or two. It takes time to work through those type of balance sheets. Now, seasonally, we can carve out harvest lows in corn and soybeans through the month of October. This year is going to be really interesting to see if we can continue to do that, because not just the balance sheet issue that we have with these two markets, but also we've got an election around the corner. And that's going to be something to keep a really close eye on. And it was talked and covered quite widely through the summer months, but I feel like it's taken a back burner here over the last several weeks as producers get out in the field and are busy harvesting. But coming into the week, we were at basically 50-50 coin flip between the two candidates. And towards the back half of the week, we started to see that trend a little bit more favorably towards Trump, which brings back the potential for conversations around tariffs. And I think that's something that the market may not be pricing in to the extent that it was just a month or two ago.
No doubt. What about South American weather? Soybeans, we've got some better rain chances on the horizon for Brazil. If those materialize, will we remove more weather premium out of the soybean market?
Yeah, I think that certainly is a potential. Just a couple weeks ago, it was hot and dry down in Brazil, which we were kind of sitting at our desk saying, well, it's still the dry season, so it shouldn't be all that concerning. Sure, the moisture levels are below what it typically should be, but it's still dry season. Now we're looking into the back half of October and beyond. You're starting to see some more friendly weather forecasts pop up. And if those do play out, I wouldn't be surprised to see that put pressure on the soybean market. And for that November contract, if we break and close below $10, there's really not a whole lot of support until you get back towards the low end of the range there near 955 to 960. Now, the thing with that is if you're a producer looking to protect the downside, you're really kind of running against the shot clock with the November futures just less than 3 weeks away from first notice day. So what we've been looking at is the January contract, and you're going to start to see the volume continue to shift from November out to January. And we like looking at the shorter dated options. The December options trade off of the January futures. So if you're a producer looking for some downside protection through the election, I like looking at those December options to help put a floor underneath the market and keep some of that upside open still in case we do get some serious weather concerns developing out of South America.
Yeah. What about the corn market if we go below $4? Do you think that's a possibility here? And then do we go back and, I guess, check out the contract low there as well or not?
Corn, I'm a little bit more optimistic on. And from a trading standpoint, I think there's going to be a lot more shorter term opportunities for market participants on both sides. I think we're at a point where we found somewhat of an equilibrium. The demand continues to be pretty darn well and strong. So I think that would support prices above $4. Ultimately, when we're looking at corn and where it could potentially go, yeah, $4 feels like a pretty good floor. For $4.30 seems like a pretty good ceiling. And coincidentally, that's where a lot of those December options are on the call strikes. The most open interest is at the 430 level. And on the put side of things, it's $4. So I wouldn't be surprised to see that provide support and resistance for the market. And again, present a lot of great shorter term opportunities here in the near term.
Yeah. Well, there wasn't a lot in the report for the wheat market either, not a change either US or globally. That market has been putting in what looks to be war and weather premium most of the week. Do you think we just took a little break today? Was it a little profit taking? I mean, or did we run up into chart resistance, or what happened?
Yeah, I think there was a combination of things. Overall money flow in the grains was a little bit weaker today. World ending stocks did come in above expectations, which didn't really aid the bull thesis. But the wheat market's really the one that we've been the most friendly on. And if you could have picked up by my sentiment, I'm pretty neutral on corn, a little pessimistic on soybeans. Wheat, that's the one I'm still pretty optimistic on. We have started to see some of that war premium come back into the market as we see conflict continue to rise in the Black Sea region. And I don't know that that's going to dissipate anytime soon. As far as the technical levels, I mean, just kind of hovered around $6 into the close. So that's going to be kind of a pivot pocket for us. The real support underneath the market that we need to defend comes in from 582 3/4 to 584 1/4. Break and close below there, that would neutralize my bias. But until then, I think the bulls still have a technical advantage as we continue to make higher highs and higher lows. To make higher highs, though, really need to get out above the recent high, 615 to 617.5. If we get out above there, I think the next stop is 650.
Yeah. How much help, if the wheat rally keeps going here, can it provide to corn and soybeans, especially when you're in the onslaught of harvest?
I think it could certainly spill over into the corn market. I don't know the beans are going to be as responsive to a rally in the wheat market. It certainly could be, but I think there's more headwinds for the soybean market than wheat would be a tailwind if it continues to rally. So wheat could certainly continue to be the leader to the upside. I think corn could follow suit, but only to a limited extent.
The funds have covered a large portion of that record short position that they had in all the grains here, Oliver. So are they out of ammunition now? Are they almost flat, do you think? And what's their next move?
Yeah, so yeah, I mean, they're at their smallest net short position for corn since I think August of 2023, and their smallest net short position in beans since I think earlier this year. So that was the big talking point through the summer, right? We're going to see this big short covering rally. We did see the short covering. Unfortunately, the rally was offset by producers selling, and which raises some concerns here going into the end of the year, right? We still have these headwinds to fight, and now that the funds have reduced a lot of their large net short position and record net short position in some cases, they have potential to add back to that if we see some of these bearish catalysts bear their head again.
Well, we did set back on the live cattle futures today. Now, yesterday we had studied a better cash trade, push us up into some new highs for the move. So did we just get into resistance? Was it all technical or what?
The cattle market has been an absolute roller coaster for the last couple months. We had the big breakdown in August and clawed back most of the lost ground through September, and back to the breakdown point here in October. And you're right. Yeah. Yesterday we did hear that higher cash earlier in the morning. We're hearing 187 bids were being passed on. And that kind of led to the thesis that we could see a higher cash trade on Friday, 188 plus. Friday morning, we were getting word that was going to be closer to 188. So that removed the upside from there and just saw the market settle back in a little bit. And ultimately, I think we're probably at a pretty good price point for cattle. And if you've got protection prices that you need to protect in August, you were like, man, I wish I would have sold something up there. Well, you've got a heck of an opportunity and a gift after this run higher through the month of September into the first half of October.
What's your longer term thought about the cattle market, Oliver? Do you think maybe in first quarter we go back and test the all-time highs or not?
I think a lot of it is going to depend on what this economic data comes out as in the fourth quarter. I've been a little bit of a skeptic, but last Friday's non-farm payroll report, unemployment report, really aided to the bull thesis that this economy is still strong and resilient. And I think that certainly played a role in some of the price action that we saw in the protein complex this week, and getting funds more interested in participating, right? In August, in the first part of September, the funds were kind of sitting on their hands. They were only long 20, 30,000 contracts in the live cattle market. But we started to see some of that economic data really, confirm the strength that we've seen. And you see this participation pick back up. Last Friday's Commitment of Traders report showed funds net long about 63,000 futures and options contracts. Later this afternoon, I'm sure we'll see another 10 to 12 added on top of that. So the fund participation is picking back up. Where that takes us into the end of the year in the first quarter, that's a big question mark for me yet. There's a lot of uncertainty still out there.
D's on back, and the hogs made more new highs for the move today. We talk about the funds in the cattle, but man, they've been buying in the hogs. Do they keep pushing that market?
Yeah, they have been on a buying spree since those July lows. They're net long about 57,000 contracts. As of last week's Commitment of Traders report, I wouldn't be surprised to see that closer to 70 in the upcoming report. Export sales yesterday, really, really strong. That certainly aided in some strength this week. That came in at 50,600 metric tons, now 17% higher from the previous week and 56% from the prior 4-week average. So certainly some strong fundamental tailwinds there, and the money flow continues to pile into the proteins. But going into the last quarter of the year and back at these prices that were previous resistance points through the summer months, I'm kind of a little bit cautious here in the near term. And again, I think if you're a producer who needs to protect the downside in prices and you wished you did something on the last sell-offs, you have these opportunities to look at that again.
Some good advice for sure. All right, thanks so much, Oliver. Sloup Blue Line Futures. That is Markets Now.